Welcome everyone to TechnoTrader's webinar on dark pool hybrid indicators, trading the momentum of dark pools, featuring Martha Stokes, CMT. First, as always, today's presentation is for educational purposes only. There is significant risk in trading. Your own due diligence should be done before forming opinions on the merits of any investment. No stocks or issues mentioned or recommendations to buy or sell. Any projections are opinion only, and all the material presented today is copyrighted, all rights reserved. And now I'm proud to present Martha Stokes, CMT. Martha is the CEO and head instructor at TechnoTrader. She is a retired professional buy-side analyst. She has managed a successful fund and trading floor, has owned and sold several businesses, sat on both sides of the venture capital table, worked on an IPO, and has taught at several community colleges. Martha is a longtime charter holder and member of the CMT Association. She earned her Chartered Market Technician designation with her thesis called Cycle Evolution Theory, and has more recently submitted Relational Technical Analysis, which is something you will learn a little bit about today. Make sure to stay through to the end to find out how to get a one-time bonus today, good for only 24 hours.
Hi, everyone. It's great to be here today to talk to you about something that is extremely important. You're going to learn the how, what, why, where of dark pools and why they are so important. This webinar assumes you have knowledge of technical analysis, at least some. If you have limited experience with stock indicators, you may feel overwhelmed at times because this is more advanced training. Take one aspect of the training and learn it well. Do not try to learn everything in one brief hour. Learning is a process. It is a layering process where you learn the basics, then you learn more, and then you more, and you layer. It's kind of like climbing a mountain. Take notes. Most people only retain about 20% of what they hear, which is a minimal amount. This webinar is an introduction to hybrid leading indicators that reveal the hidden dark pool activity before a huge momentum run. It is not a complete course on trading stocks with dark pool activity. It is impossible to learn something in just a brief hour or so. And it is very important because the dark pools are the dominant major market participant group out of 12. They dominate the markets worldwide. And it's important to understand there's so much misinformation and false information on the internet that I come across that this is imperative that you understand and have the facts. What is a dark pool? For the financial markets, dark pool is an alternative trading system venue, an over-the-counter venue that provides huge hidden liquidity for large lot transactions. We're talking mega lots. Dark refers to the fact that the orders in the ATS venues are not on any market maker book. They are not lit, meaning visible to the exchanges and people trading on the exchanges. Pools refer to the vast depth of the liquidity, aka the huge share lots offered for sale or purchase on these exchanges. You can't see dark pool orders, even on a level 2 screen during the day. Day traders are often told they can see dark pools, but you cannot. Transactions are often delayed. The reporting of dark pool orders is delayed, mostly settling after the market has closed. And there is a reason, and this is legal. Yes, you can learn how to identify dark pool buy zones if you use end-of-day charts to look for them. But if you think you can find them intraday, they are not dark pools that you're dealing with. They are not on the exchanges. Dark pool venues, or ATSs, started out with a few giant funds. This is the buy side, not the sell side. The sell side is banks. The off-exchange transactions in 2005 accounted for less than 5% of the activity of the stock market. And by 2010, that had risen to 39%. The relative average at this time is about 40 to 60% at any given time, depending upon the market conditions and market participant groups active in the market. Right now, it's at about 70%. They are dominating the market at this time. Dark pool operators. There are about 50 dark pool venues currently out there that you do not have access to, that asset managers do not have access to, that small funds managers do not have access to. This is a very small selective club. UBS, Citadel, Deutsche Bank, Credit Suisse, Barclays, Goldman Sachs, NASDAQ, and New York Stock Exchange. They're all ATS venues that you are not allowed to be on, and most smaller funds managers aren't on it. So it is an exclusive club of a very small group of buy-side institutions. I call the most important market participant group trading in the financial markets today the dark pools. They are the buy-side institutions. They control $100 trillion of assets worldwide. A lot of Americans are very concerned about the fact that we have a very high debt rate in the US, but they could easily pay off all of the US debt and still have plenty of money to invest. That's how big they are. The dark pool groups consist of giant buy-side institutions, which are mutual fund and pension fund companies, the largest in the world. Derivative developers of ETFs, REITs, ETNs, ETPs, ETCs, and other derivatives of the market. Large buy-side institutions who qualify to trade on the alternative trading venues because of the lot sizes and their capital base that they have that they're managing. All of these companies are huge corporations or global conglomerates. Banks are not part of this group. Banks are sell-side institutions. So for the professional side, you have the buy-side institutions and you have the sell-side institutions. And the giants are battling out a war that's been going on since 2008. Statistics of dark pools. Your broker is required by SEC regulation to fill your order in 1 minute or less, and it often seems like it happens in just a few seconds to you. Most dark pool orders average a 10-minute fill. That's how large their orders are. It can take longer as they gather vast quantities of shares to fill a large lot order over time. Dark pool orders are permitted to delay reporting and are usually not sent to the national clearinghouses until well after the markets close. I know this and I observe this all the time. I'm looking at my market condition analysis scans, and at the end of the day, there's certain numbers here and there, and then at the end of the day, the numbers change and volume changes also. This means that if you are day trading, you can't see any of the volume or activity of the dark pools in your charts. It's not there. Dark pool orders are a minimum of 100,000 shares to block orders as large as 20 million shares on average. Just this week, I saw a 30 million share block order. That's a lot of shares of stock going on, and it happens before the market opens and during the market, but the delayed action says you can't see it on your charts. It doesn't show up. Why are dark pools legal? Dark pools were started in 2002 after the legislature of the US at that time changed the pricing structure of stocks from fractions to decimals. Why did they do that? Fractions had been in existence since the 1800s. That's how stocks were priced, in fractions. Well, the US was told by the sell-side banks that the average American couldn't figure out a fraction. So they really needed to change to decimals because the banks wanted a tighter spread. They wanted a more efficient market. And so the legislature thought, oh yeah, well, maybe average person can't figure out fractions, but they can, and they did for many years. Dark pools provide the most important market participant group a place to buy and sell huge lots without being front-run by HFTs, what used to be the So's bandits and the rogue floor traders who left the sell-side banks and started trading on their own when PCs came into existence. The market is continually changing. It's continually evolving. Technology changes it. So what was happening in the 90s or the 2000s or 2010 or even 2015 is totally different than what's happening right now. And unfortunately, on the internet, you get recommended stocks, you get the red light, green light, called AI now. This stuff doesn't work. If it worked, the professionals would be using it. The professional side is hiring more human floor traders, not doing less. AI is only used for certain things. It is not used for trading. They manage the bulk of the wealth of the US and other nations, these dark pools. Protecting the wealth of the middle class of America and other nations is a priority to them. They feel a deep fiduciary responsibility. Dark pools are an integral part of all financial markets worldwide. They are everywhere. So their status is critical to the global economy. If they go to the SEC and FINRA and other places and say, we are being front run, we need to have an area where we can do our transactions, where nobody can see what's going on because they buy on the penny spread. They want to hit a very narrow price range. And that's why it's hard for you to learn how to find them. And that's why when you're told that, oh, dark pools make huge volume spikes. No, they don't. Because they spread it over a long period of time. So you need to learn these things and stop reading stuff on the internet that is inaccurate, or ask, is this accurate? This is the SEC Midas, dark pools versus HFTs. The SEC Midas is one of two monitoring systems that the SEC has that monitors the markets every single second of the day. The professional side trades on the millisecond. You trade on the 1 minute. On the millisecond means there's 60,000 trades for every minute. These are the dark pools. They strike the penny spread and they keep in a slow, narrow range that is extremely consistent. If the price goes out of their range, their automated orders stop and pause. If they go below the range, they also pause and they may buy if it goes to a certain level and bring it back up into that level. It's one thing you need to know. These are the HFTs. Volatility, HFTs, high frequency trading firms, which use computers to do all the work, and they have programs that are very complex. And in the middle is everyone else. HFTs chasing dark pool activity. Dark pools have buy zones, and they're very specific, and you will learn them when you take one of our Tech and Trader methodology courses that is right for you. And you will learn how to get into these stocks, and as the stock moves up, the price will move up, and then another platform or another buy zone will form. And you see that we have indicators that tell you when the dark pools, there's a shift of sentiment. And when dark pools are taking over and controlling price has a very, very specific range and a very specific way of looking on the charts. When it's not in control of the dark pools, they'll pause their orders. So their floor traders adjust the prices accordingly, set the order routing, set the number of shares and transactions, and the TWAP orders, time weighted at price, trigger, but they also pause specifically. So the traders are following their orders that they're routing, and they can trade 5 million, 10 million shares swing trade. Pro traders do not day trade. They stopped day trading many years ago. So if someone says they're a professional day trader, they're not. They're on the retail side, and they're just saying that. This huge volume surge, I'm being told all over the internet, oh, the huge volume surge, that's dark pools. That's not dark pools. That's not dark pools. That is an HFT. When you see a gap up in the chart like this on a daily chart, each of these is 1 day. On a daily chart like this, the only way a gap can form on a daily chart is if it gaps up at open and then runs up and oftentimes runs right back down. That volume bar is HFTs. That's the worth the ticket to get into this training. You have to understand that there will be very low volume bars and there will be shift of sentiment. Are there large lots or small lots? On what side are they on? And how heavy in concentration are they? That tells you what's going on in the market. So that's HFT, and they're big gaps. And wouldn't you like to be in that stock before it gaps? That's what we teach at Tech and Trader, that you get in and you wait, because you know that this is a consistent pattern and it's going to break to the upside because of the indicators and how we have our buy entry signals. We don't use continuation and reversal patterns. We use true buy entry signals that form in the modern market because of pro traders and dark pools. Instead of being fixated of finding a stock to trade, or using a recommendation service, which is very bad because the recommendation service says some guru who's already bought the stock. And then he says to all of his followers, oh, you should buy the stock. And so the price goes up. And while the price is going up, he's selling it. Why? Because it's legal for him to do so. He only has to inform you that he has bought it. Or the red light, green lights, which are called AI now, which are nothing new. They're old style things with a rename, and they didn't work in the 90s. They didn't work in the 2010, and they're not going to work now. The market's too sophisticated. Why would there be more and more floor traders on every single floor, whether it's giant buy sides, large buy sides, or banks, if they could use AI? Think about it. What a dark pool buy zone looks like is what you're going to learn as you become a TechnoTrader student. What a dark pool sell side zone looks like as the stock has showing a business cycle where it's going to top and move down, the dark pools start to sell out early. Where these zones are located on each individual stock chart, so you can go, oh, here's a buy zone. This is what we teach. No one else teaches this. They're all teaching you to chase HFTs. Bad idea. How these zones impact your trading. In any given market condition, there is a profit zone where most of the highly lucrative trades occur. Now, some of you have been taught, oh, just take 10 cents. Just take 10 cents and sell it. Oh, just take 20 cents. You're leaving a fortune on the table because you're not going with the dark pools and the pro traders and making all the money possible. The buy zone is that place where the giant lot institution sees control of price without disturbing the trend. It's moving sideways. It is the HFTs and the professional traders who create momentum runs that retail groups follow with speculative runs. They're gambling. This is a millisecond scale, and you cannot have a millisecond scale. It's a powerful billion-dollar computer that is able to trade on the millisecond. That's why the traders turn that over to an AI format. And then a little pro trader, and then another little consolidation. Then we have our first run up, a little correction, and then this huge run up by HFTs. You have to be in this area. You have to learn how to get into this. You can't see into this transaction. And even if you could watch a millisecond trading venue, your eyes would not be able to keep up. So you have to learn this way. Why most retail traders miss the buy zones? Retail traders miss the buy zones because they use outdated price and time indicators. Price and time indicators were written prior to the dark pool ATS venues. They are the oldest indicators. That doesn't mean they're the best. They're just the oldest. That's where we started, with price and time. Indicators that rely on price movement do not reveal dark pool activity because dark pools do not disturb price. Dark pools do not move price in huge gains. Most retail traders chase HFTs and professional traders after prices have already moved significantly, and then it whipsaws, and then you have a loss and you're going, darn, this market, it just isn't fair to the little guy. It's fair to the little guy. You just have to learn how to trade like a professional. And all the professionals will respect you. And that's a big deal. Instead of being called, oh, another hobby trader, you're going to be called, oh, a semi-professional. Wouldn't you like that? Hybrid indicators reveal dark pool activity, and they're the only ones that do. These indicators incorporate more data in a sophisticated formula. They define which side of the transaction the large lots dominated. So you are able to see which side, the buy side or the sell side. Are they buying or selling? And you will know what's going on more. And these formulas are very sophisticated. Where are the buy and sell zones? Each market condition has a specific location for the buy-sell zone. Here are the 6 primary market conditions. We have a bottoming market condition. We just completed that in October. Then there are trading ranges that are going on, but this is not a trading range market condition, although the indexes will look like a trading range. This is a platform market condition we're in right now. Why? Because the dark pools dominate because retail is too scared to invest. A lot of people are afraid of the market. They think a recession is coming. They think the world is coming to an end. It's not. This is just a normal everyday baby bull market starting out with its little fledgling ups and downs. That's typical. It's not volatile. It's sideways in narrow ranges. Moderately trending will be following this, and that's where you get to see some pretty exciting momentum and velocity moves. And the velocity runs are brief. There may be a velocity run for a little while. I'm seeing quite a few velocity runs right now out of platforms. Pretty exciting to see because there's lots of money in the velocity runs. And then the topping market, when businesses reach the top of their cycle and they have a market saturation of their product or their new technology, they will go into a business decline. Cycles for businesses go and they vary for each individual business. So you have to learn to read individual stocks. You can't just go with the flow of what somebody is recommending. The dark pools are bargain hunters. They don't buy cheap stocks. They buy stocks with fundamentals that are above the price. They buy it at the price that is below the fundamentals. And you can see that on the chart. We also have, there's also fundamental line indicators available too. So the dark pools are bargain hunters during moderately downtrending markets and thus create the bottom formations. So one of the bottom formations, the buy zone, is going to be in the bottoms or in the platforms. They're selling in slow, steady rotation as the stock goes over speculated in price, contributing to the top formation. So the sell zone is going to start occurring as the stock goes too speculative, and now fundamentals are below price. The dark pools create the hidden liquidity draw that initiates the huge momentum price action of the velocity market conditions up or down. So we have a platform market condition, and we have the platforms that form, and then we have an H50 or a pro trader gap up, and then another platform, another gap up, another platform, and another gap up, and then another gap up. This is the market we have right now. There are lots of stocks trending sideways. You're told it's volatility. It's not volatility, it's platform building. So we have a lot of things going on, excuse me, in the market right now that you don't understand, and you're being given the wrong information about. So we have our indicators. These are 4 of the 5 that you get when you become a TechnoTrader student. These are customized specifically to your trading style and the market condition present. This gives you the optimum advantages over all of other retail traders because you know where the large lot buying is going on, where the large lot selling is going on, where the buy zones are, what the pro traders are doing, so you can get in with the pro traders. You want to be semi-professional? Jump in with the pro traders, and then you are in before the gap. And this is very important. These are what platforms are forming right now. And you've probably never heard of a platform market condition before, unless you have been a TechnoTrader student or you've been to a lot of my webinars. Beyond the basics of chart analysis, you can learn every strategy there is on stock or option trading. You can learn every indicator, candlestick buy or sell short signal. You can take every seminar, webinar, and read all of the information available for free on the internet. But you will not be as successful as you deserve to be until you understand the catalysts behind the technical patterns you try to find to trade stocks. You can't use a recommended stock because it's already run most of its run. You want to get in before the run. You can't use a phony AI because you're going to be in and out and in and out, and you're going to take losses. You have to be able to run the wave of the momentum move out of that buy zone. And you deserve to be as successful as a professional trader if you are taking your trading seriously. You would not be here today if you are not serious about learning about dark pools, about learning how to trade, about learning to make real money, not pennies, not 20 cents on a trade, because I can assure you it costs you more than that. The catalyst behind sudden price action is most often dark pool activity that began weeks before the sudden move. So you can plan ahead. You say, oh, look at this dark pool activity. This thing is going to move. You have time to plan. Wow. Wouldn't that be wonderful that you could plan ahead for your trading? It's called watch lists. You need to identify the buy zones before price moves with momentum, not chase the stock. All of you are chasing the stock. You wouldn't be here today if you were making the money that the professionals make, and you can. So we have a buy zone right here. We have a shift of sentiment. We have the stock running up, and then the huge momentum move. You want to get in early and ride it up and be patient and know that it is going to continue to move up. Have the confidence to hold it so that you can have 10, 20, 30 point gains, not a fraction, 20 cents. Dark pool accumulation is chased by HFTs with gap ups. So they build their platforms and they have an HFT gap up. See the little gap up? HFTs cause the gap ups at open. That's who does it. And another one, and going up, and there's another platform and another HFT gap. See how that works? And if you can learn to get into these, and that's what we teach, that's what we're all about, then you will be able to enjoy some pretty good gains and some gaps ups that really makes you some real money. We are in a platform market condition. It will shift to a velocity, starting to shift a little bit. You need to get your course now, because in the fall, we're going to have a whopper of a fall rally. That's not a prediction. That's just how we see the market forming and developing, all this accumulation going on over time. Then all of a sudden the retail traders come back from vacation and they go, wow, what happened to the market? It's really moving. Oh, everybody says the economy's okay. Well, it's been okay for almost a year now. It's fine. Oh, inflation is down. Oh, yeah, well, maybe we should get back into stocks. You're late already. You're already late. So, and then you can see the tops and when to start getting ready to sell short. In the Methodology Essentials course, you will learn the shift of sentiment pattern. That is very important. So there's selling going on into a bottom, and then suddenly there's a shift of sentiment. And that's important. This is a combination of candlestick patterns and large lot hybrid leading indicators. You have to use both. You can't just use indicators and you can't just use candlesticks. You have to have both. So this is a shift of sentiment that occurs that tells you that they have taken control. They start right here, they take control, and then the stock moves up and completes its bottom. The shift of sentiment pattern occurs as HFTs search for the dark pool's liquidity draw. At times, HFTs trigger orders accidentally trading against the dark pools. Those are those gap downs, and then all of a sudden there's a huge reversal. That's because the fundamentals are right in here, and they pushed it down. So the buy side goes, oh, this is a heck of a bargain. We're going to buy more of it, the shares of the stock. This is the only time that they move a little bit faster than normal. Pro traders step in and go, okay, we're going to ride this up. And then big run up at the start of the day. Yep. And you're trying to get in here. No, get in down here with the pro traders and you'll quadruple your profits. This creates a temporary one-day sell down, which often reverses the next day. When the HFTs accidentally trade against the dark pools, it creates a temporary one-day sell down, which often reverses the next day. That tells you where the buy zone is starting. Extreme price action is caused by HFTs. The shift of sentiment occurs prior to the HFT action on the upside. So the HFTs will gap something down accidentally, then the fundamentals are above price. Price will move back up into the buy zone, and then HFTs will gap it up. Candlesticks have a specific pattern and formation on the chart telling you these things, and that's what you learn. You have to read candlestick charts as easily as you read a book or sheet music or an engineering format or a real estate blueprint, whatever you do, or if you're a doctor, x-rays. Bottoming stocks. Who controls the price in a bottom? Who stops the price from going down further? Who stops the price from going down further? Who stops the price from going down further? It's a buy zone. It's the large lot dark pools that halt the downtrend. Meanwhile, there's still smaller funds in retail selling. Oh, I give up. I give up. The economy's awful. We're going to have a recession. Oh, and so you sell in capitulation. Investors sell on capitulation all the time. It's very, very sad. I'm doing this because I'm trying to help retail traders and retail investors learn about the market so that they can be more successful, and we can have less of this volatility that retail side creates. Okay? The better you trade, the stronger the stock market, the stronger the US economy, the more prosperity for everyone. So this is a bottoming market, and this is the dark pools dominate, and they buy and they keep pushing price up to the level at which it would be the fundamental level, which is right here. Okay, your indicators and settings. Most retail traders have an incomplete set of indicators. There is nothing wrong with using any indicator that you wish or you really like. However, TechnoTrader students excel at trading and have more profitable trades because they are taught to use a complete set of indicators for identifying dark pool activity and pro trader activity. When I do a trader consultation, when someone asks me to take a look at what they're doing, the most common mistake I see is an incomplete set of indicators. It's pretty much carte blanche. Everybody does it. All retail traders say, oh, price and time. Price is the most important thing. Yes, it is. But you have to back it up with who is controlling price. Most of the time, the indicators you choose are using only half of the data you need to study. The net result is you make lower profits or you take a lot of losses. How many of you are taking a lot of losses? I do not care what indicators you choose to use so long as they make sense to you and that they work. The indicators should be easy for you to understand. However, you must have indicators that include all of the data you need to analyze, and you don't. In the Methodology Essentials courses, we teach the 5 leading hybrid indicators that reveal where dark pools are buying or selling. This gives our TechnoTrader students a decided advantage over traders who use only MACD or popular price only indicators or oscillators like stochastics or RSI. It's not enough. Or maybe you have volume, but you don't use it properly. So what is the data for indicators? Using indicators properly. In order to use any stock or market indicator properly, you must understand the category of the indicator. There are indicator categories. I studied 250 different market and stock indicators before I did my CMT test. So I'm kind of the guru of indicators. What market data is used for in the formula? What market data is used in the formula? You don't need to know the formula. You just need to know what market data is in there. What market condition was underway at the time the indicator was written and the intent of the writer. Every time an indicator has been written, there was a reason. Stochastic was written in the 1950s by George Lane because we had a training range market condition and he was trying to build an oscillator. We had RSI in the 70s and Wells Wilder because it was a different kind of market. Stochastics wasn't working. So things change. What are the limitations of the indicator? There is not an indicator written that doesn't have limitations in certain market conditions. That's just the way it is. Is it for short-term or long-term analysis? I kind of cringe when I see OBV being used for trading stocks. You have to know whether it's for short-term or long-term. What indicator patterns form and what each means. What indicator patterns form and what does it mean? Under what trading conditions does it work really well or works ideally? So some trading conditions, the indicators will not work as well. Market conditions and trading conditions and who is in control of price. Market condition is the trend that's going on the overall market. Which subordinate indicators to use with the indicator, if any? You should always have a subordinate indicator applied to your primary indicator. If you don't want to know what I'm talking about, you need my course. The exact formula is only useful if you are a mathematician and wish to alter that formula for your own use. When you alter an indicator, it becomes a proprietary indicator unless you release the formula. Data used in stock indicators: price, time, quantity. 2 data sets are needed to create a stock indicator: price and time, quantity and time. Price and time indicators lag to some degree. Some of them really lag. What I mean by lag is price has to move before the indicator indicates anything. So that's a lagging indicator. It is following price. It is not showing you where price is going to go. Quantity and time indicators often lead. They're good, like volume can indicate things before price moves. That's good, but it's not enough. Price, time, and quantity indicators are the modern hybrid leading indicators, and they lead most of the time. Why? Because hybrids reveal dark pool activity, because dark pools do not move price significantly, and their volume is spread out over time, so it's harder to identify the large lots without the hybrid leading indicators that have a very complex and sophisticated system. So this is what you see on the chart. You have time. This is a daily chart. On the days are listed below here and the year. We have price over here. We have price in the candlesticks. We have price up here. We have quantity, which is volume for this particular indicator. Quantity is a group of indicators based on quantity. Some are called volume. And this is the quantity volume indicator. Price, time, and quantity is a hybrid leading indicator. This is a quantity indicator, but it is also a large lot versus small lot indicator to indicate where the large lots are buying or selling. Now, HFTs cause spikes, and we have the smaller funds managers who have $3 billion or less of assets under management. They are no longer classified by the SEC as professionals. They are on the retail side. So they often use a VWAP order, and I know all of you probably have heard about the VWAP, and oh, it's such a great thing because it shows you dark pools. No, it doesn't. It shows you HFTs, and it shows you smaller funds. So you're probably trading with the smaller funds, and the smaller funds managers are just ordinary people. A lot of them are salespeople, and they don't know much about the market, and they often have no knowledge of technical analysis because they think all they need to do is follow the news, follow the fundamentals, and that's all they need to do. And they're actively trading. A huge number of them went out of business last year because they lost their clients' money by actively trading the fund without adequate training. The SEC is clamping down on them. Every day I get a list of things that the SEC is doing that I study because I'm a buy-side institution. I have to keep track of it. And almost always there's something about smaller funds and being slapped with a fine for this and that and the other thing. Categories of stock indicators. Trend. This is a category. Trending indicators or non-trending, action, direction, continuation. These are usually simple price and time indicators. The oldest indicators that they are, like moving averages, are the oldest. These are not as useful as they were before dark pools existed. Velocity, acceleration, deceleration, volatility, momentum. These are also mostly price and time indicators, so limited usefulness. Quality, strength of the trend, strength of the price action, continuation, duration, sustainability. These are value indicators revealing the strength of the price action in relation to volume. Oscillators, overbought, oversold, overextended, increasing, decreasing energy. You have volume oscillators. You have price oscillators. How many of you know about volume oscillators and use them? Should be using them. TechnoTrader students learn to use both types because you need both a volume oscillator and a price oscillator at times at various market conditions. Flow of funds is money flowing into or out of that stock. The best are cumulative in formula and construction. So they're accumulating information over time, data information over time to really give you that. You also have the fundamental line indicators, which show you in very line graphic form whether money is moving in or out. Accumulation distribution, large lot activity versus small lot activity. You have the giant lots and you have the small lots. Quiet accumulation, quiet rotation, which is lowering inventory of some stock to acquire others. Quiet distribution is when there is a point where people are demanding redemptions. They reveal where the dark pools are slowly acquiring millions of shares of stock, or when they are slowly rotating out of a stock to purchase a different stock because the company has reached market saturation. Its business cycle is going to go into a decline and the stock will go into decline. Why? Because the fundamentals will decline. Revenues will stall, Earnings will be okay and up for a while, but they can only do that so long, and then earnings start to decline. But they get out well ahead of time because they're not worried about getting out at the top. And they certainly aren't going to buy and hold if they don't have to. They're going to lower inventory of stocks that are great risk. Categories of indicators: hybrids, the indicators that provide more than one combination and or include all three pieces of market data in a more complex formula. These lead price action. This is big. Cycle. They reveals the cycle patterns in some stocks. Cycles can warn of an impending topping formation before price collapses. Cycles also show when a stock is about to bottom. These are part of the dark pool indicators that we teach. They're very, very important because all businesses have cycles. Some of the cycles are annual, some of them are 6 years, some of them are 10 years. It all depends. Specialty, detrending, relational, comparison, deviation, harmonic, pivots, and stops. These are specialty indicators designed for special analysis and special conditions. Subordinate indicators applied to your primary indicators. These include moving averages, linear regression, moving linear regression channels, and bands. These subordinate indicators help define and speed up the process of analysis, and they're easy to learn. Subordinates are part of every one of my hybrid leading indicators. Subordinate indicators make analysis faster and easier with simple signals that are reliable, and that's the most important thing. When you enroll in the methodology course, you will receive a customized set of indicator tools set up for your specific trading style or styles with detailed instruction on how to analyze and use each indicator. They only come with the course because if you got them, you couldn't figure it out without the course. They take training. You have to have spatial pattern recognition skills. You have to understand what signals are forming, what the crossovers mean, what the subordinate is indicating, what the primary is indicating. You have to learn these things because this is not available anywhere else but TechnoTrader. These are our custom proprietary system. So, dark pool indicator patterns. We have a volume oscillator that's gone to the bottom of this thing. This is where the dark pools have started to slow down the selling process. Okay? And so it goes up and down, and then they start to accumulate, and they form this little W bottom that's fairly quick. And then the stock starts to move up. The indicators show you right here that there's a crossover that tells it that it's going to keep moving up, not down. This low shows us that this is going to run up, that we're starting into a situation where a bottom is beginning to develop, that the downtrend is almost completely over, and that you need to shift to the buy side and start buying stocks when you see these crossovers occur and the stock move up above it. So we also have the shift of sentiment down here, and we also have our volume with moving average, which defines whether we have dark HFTs or dark pools, and you can see it easily. So that's your shift of sentiment. That's your dark pool buy zone. And that's your volume action. You can see that volume pretty much stays below until pro traders come in and start buying the stock to drive it up, to get HFTs to gap and run it up so they can make much higher profits. You want to piggyback off of the pro traders because you will have higher profits, easier trading, less risk, and you will be very happy. You can take your spouse out for dinner because you made a huge trade that day. This is where that shows that this bottoming action has begun. So you need to stop selling short because it's over. It goes down a little bit more, but not enough for a lot of profit. So this is what happens after the run, and it starts running up. And the bottom completes right here. Pro traders get in, and then HFTs, and we have this spike here, right here, that warns that we have a topping risk coming because price has gone too speculative. So these volume oscillators are critically important. This is money flowing in. It based here, it was flowing out, and now it came in, and now it moved up. So these indicators are very important to learn to read, and they're easy to learn, and they come with your course. Dark pool buy zones are not a momentum price action. The dark pool's intent is not to move price, but to strike a penny spread to achieve a desired price within the set range of price that they have set forth with their quantitative analysis. As the dark pools buy over many weeks and months, they slowly drain the liquidity for that stock. That puts pressure as on the price of the stock that they're containing. Okay. That creates a liquidity draw that professional traders can identify with relational technical analysis. They often use mine. I have a lot of professionals that work with me. When pros find the liquidity draw, they begin buying the stock for a short-term trade. Pros swing trade. They can swing trade 100,000 shares to 5 million shares, no problem. They have the money to do so. This creates more demand and volume increases because pros are buying larger lots at a faster pace than dark pools do. At this point, the stock is poised for a sudden huge gap or large up day by HFTs because the HFTs see this huge volume surge, and a lot of the HFTs are on the assumption that a volume surge means that the dark pools are in it. They were in it, they were buying it, and now it's obvious to the HFT computer program. The dark pools cease their automated buy zone orders and pause and wait, waiting for professional traders, HFTs, smaller funds, and the retail crowd to start buying the stock, creating the speculative momentum runs that allows for follow dark pool buy zone completions. So the momentum runs that always follow dark pool buy zone completions. When you have a buy zone that completes, pro traders will be entering because they see the liquidity draw. They'll trigger the HFT automated orders. The smaller funds are using VWAPs. That triggers their orders because there's huge volume spikes. And then the retail crowd sees this thing running like a bandit, and they go, I'm not in this stock. I need to buy the stock. It's going to go up forever. Oh, I got to buy it. I got to buy it. You need to be in with the pros so that you can be sitting back smiling, not crying because or being frustrated because you bought the stock and now it's plummeting. So, dark pool hybrid indicators. TechnoTrader has developed a unique set of indicators that you can use with your preferred charting program. You do not need to change your charting software. However, these tools are only available with our comprehensive courses because you will not be successful unless you learn how to use them. It takes some skill and it takes some learning on how to use them. They're not as basic as a price and time indicator such as stochastics or MACD. The indicator tools require training and skill development. Spatial pattern recognition skill is a big part of it. It is not just about a crossover signal or a candlestick pattern. It is learning to recognize a subtle footprint on the chart using all of the data, price, time, and quantity. Hybrid leading indicators, learning how to use these indicators is not difficult. Anyone, including someone who has never traded before, can learn with practice how to find the dark pool buy or sell zones before price moves with momentum. So you have a downside run, and then you have a consolidation down, stopping the price from moving down, and then that's your buy zone, and then you want to get in. The difference between how you trade right now and how you will trade when you become a TechnoTrader student is the profits that you will make. The ability to enter a stock before a huge momentum move provides the lowest risk and highest profit potential trading. Whether you want to swing trade or day trade or position trade, the Methodology Essentials course is what you need, and you need it now. We are going to have a market that's going to demand hybrid leading indicators as the dark pools start aggressively acquiring more and more stocks to build more mutual funds and more ETFs because the demand is increasing already. I wish to God I had gotten here 17 to 18 years ago, Ernest. I have talked to a lot of people and they go, oh, well, I think I can learn it on my own. You can't. You have an option. You can learn to trade or you can struggle for 10 to 20 years. I hear comments like this all the time from my students who have come to me after they've taken other courses. The single biggest mistake that retail traders make is to assume they can figure this out on their own. Can you learn to drive an Indy 500 race car by yourself? You can drive your own car, but could you go into an Indy 500 race after taking a race car around the circuit a couple of times and not crash and burn and die? The stock market is a race. It is a Indy 500 fast and complex situation. You need to learn how to drive an Indy 500 car in the stock market. A supportive, comprehensive training course is mandatory if you want to succeed in the modern automated market. Without a trading process that gives you a complete step-by-step detailed broad map of consistent results, you will lose more money than you make. You have to pay yourself. How much are you worth an hour? How much are you worth an hour? How many hours you're spending cruising the internet, trying to figure it out on your own? You could get through this course in a few days to a few weeks or a couple of months, depending on what time you have, and you'd be up to go. Not 17 or 18 years of trying to figure it out. And that's what the normal is. Do not struggle for years and years. All you will do is erode your capital and, more importantly, your confidence. It is far more difficult to get rid of very bad habits than it is to learn how to trade, to do this correctly in the first place. I love beginners. I love people who have never really traded much at all. They take the course, they follow the rules, they have their parameters, they have their trading style, they do their simulator trading, and they're successful from the start. Not 10, 15, 20 years later, they come to me, Martha, I can't figure this out. I should have come to you before. It's like, yeah, give yourself the gift of a good education. You deserve it.